Craig here with the market update. Okay, so look, the focus for markets at the moment obviously is US equities, especially after what happened last week, where we saw some some heavy selling, some risk-off trading, and lots of volatility. US equities did start the week on a positive note and tried to stay positive, but look, the sellers have arrived again and sort of capped the current rally. Look, we still have a nervous market. We've got a market that is dealing with a lot of uncertainty. Markets hate uncertainty, they punish uncertainty. That uncertainty obviously is not going away anytime soon, so I would suggest that the sort of choppy trading that we are seeing is probably set to to continue. Look, having said all of this, this week is a big week for central bank meetings. We do have the Bank of Japan. We've got today. We've got the Federal Reserve tomorrow morning, and after that we've got the Swiss National Bank and the Bank of England. Let's just start off with the Bank of Japan because it is today. It is meaningful. What is interesting is that the market in the last couple of days has been selling yen into the meeting, which suggests that the market isn't scared of the Bank of Japan. Look, the market knows that the Bank of Japan will be raising rates, obviously not today, but they're not scared that it's going to happen anytime soon. So the Bank of Japan is probably still months away before they do that. So the market's still thinking that it's safe to swim in the water. But there is a risk, obviously, and that will come in the press conference when Governor Ueda speaks. If he does give some sort of hawkish tone, if he does start preparing the market for those rate hikes, then obviously the market will react to that and buy yen. If we do see the market react and see dollar yen a lot lower, market buying yen, that is going to be a risk negative. So look, I'd suggest that today I would pay some attention to what's happening with the Bank of Japan, even though the market does look to see that it is a non-event. All right, what's more interesting and the meeting that literally every trader's been waiting for is the Federal Reserve meeting that happens tonight, early Sydney time in the morning. Now, what is interesting about this meeting is that once a quarter, the Fed releases its dot plot. So this is where every single Fed member, gets to put where he believes that the Fed funds rate will end, for 2025 and further out. The last dot plots that we saw last year, the Fed was basically only pricing in, less than 2 rate cuts for 2025. So a Fed funds rate down towards about 3.85%. The market at the moment, though, is pricing in 3 rate cuts. They want 3 rate cuts from the Fed this year. So it's going to be interesting to see how those dot plots pan out, whether or not the dot plots are lowered and go towards more market pricing. If that happens, obviously that's going to be seen as potentially dovish and market friendly. So the market's going to like that. If the dot plots don't move, I'd suggest market probably won't like that because, as I said, the market wants the Fed to cut rates. No doubt, obviously, look, the 2 biggest issues that the Fed has. One is slowing US growth, that potentially the US economy might go into recession. That's the biggest reason why the market wants these rate cuts. But at the same token, the Fed's got a big problem, and that's with the tariff policy. So tariffs have just come into play now, and we're going to see more of those, obviously, with reciprocal tariffs on April the 2nd. And the inflationary impact of those tariffs is something that obviously the Fed is worried about. They certainly can't cut into inflation rising again. So look, I would suggest that Powell in his press conference is going to try to play this, kicking the can down the road, that he doesn't want to commit at the moment to any sort of imminent rate cuts because he needs to see how exactly this tariff and inflationary policy may actually play out. Look, Fed FOMC is always volatile. If the market is disappointed, and especially with a nervous market at the moment with the Fed, we could see some selling and potentially it could be heavy selling. So again, tonight with the Fed, obviously huge focus. Okay, so it's worth mentioning another market at the moment, and a market that is doing exceptionally well, and we've mentioned this many times, and that is gold. Gold continues on its merry way, new record highs. Now it's firmly above 3,000. Look, it doesn't matter what is happening to the market, whether or not dollars bid, dollars offered, yields are bid, yields are offered, risk on, risk off. Gold doesn't care. Gold just keeps rallying. This is a serious bull market that we're seeing at the moment. Look, if you have been selling gold, trying to fade it, you're just ripping up cash. So look, I would suggest that, if you are trading gold, obviously buying the dips is something that is working exceptionally well. Okay, look, good luck with the central bank meetings today and the Fed tonight, and we will check back in with you soon.